So it's the third time I'm on the stage today, but quite enjoying it. So Weiyi Mei or Will Mei, can I call you Will?
Yeah.
We know each other, not the first time see each other, and actually it's a huge privilege for me to be in today on the stage together with you to talk about the markets, about the cycles, and yeah, I mean, I can introduce you to our audience. So Will Mei, he's a general manager in the Sycamore Investment Funds. Is the investment arm of the Folk Family Foundation, which is one of the largest families here in Hong Kong, and also a very active investor in the real estate, in technologies, in the private equity. With the time being, these funds and this family also have a lot of knowledge and experience in investments. And also, Will, he's the general manager and chairman of several listed companies, like Virtual Minds and a couple more. So having such a speaker today is a really privilege, and I hope you enjoyed our conversation. So I will start with the questions.
Okay, thank you.
So my first question will be, you operate at the intersection of public markets, asset management, and private capital. How different is the way things today compared to the 3 or 5 years ago? What's the difference you see?
First of all, thank you very much. And it's my first time to present in front of such a large group. I used to work as the CEO of several large asset management company affiliated with the insurance company. So it's my first time speak. So when I got this task, I think I need to prepare for some notes. So just in case, I frequently lost mine when getting older, so I prepare some notes.
Yeah.
So compared to several years, I think ago, now people are, I think, it's quite different from 3 to 5 years ago. Now people shifting from growth narratives to more safety and certainty narratives. Capital has moved from growth premium to safety and certainty premium. And for example, just in area of AI, the same investor used to invest every LLM. Now they need concrete monetization. So this is a big difference. Now people, the risk appetite is still there, but they demand more resilient cash flow. Yeah, that's different.
Exactly. So great experience. So now it's more complicated to get money, right? So that's exactly my second question is. So capital under discipline, when the markets move from the expansion, when you have all these printers are printing money, there is expansion, and now it's let's say it's a different time. Now it's more like a discipline. And what is the first thing big capital you have access, you manage, stops tolerating? What's the first thing capital stop flowing into, stop investments? What's your take on it?
I think the first thing capital stop tolerating is the unexplained risk. They need a more concrete, visible future path to profitability. I think this is the first thing. And the capital turn back to first principles. Then you know how to make money. And I think, for example, in 2021 to 2022, in SPAC bubble,
yep,
and 2023 to 2025, the valuation reset. It's a clear example. So they need more explained risk. So I think it's
Yeah, very good. So let's say the tolerance to the risk is dropping down, and right now people become more picky. How would you describe a Chinese financial influence? Because you're in Hong Kong here, of course, there is a flow, it's a getaway for Chinese money as well. And for today, how do you think the Chinese influence to the global markets? Where is the clear presence and where is still misunderstood?
I think China's influence is built on I think the foundation is China has world's most complete manufacturing ecosystem and also the world's fastest technology iteration circle. I think this is the foundation of China. And inward, China has, I think, a very strong manufacturing base in terms of EV and batteries.
Right.
And outward, China not only exports products, they actually export the complete supply chain. So I think this is what China.
Strengths of China, right?
Yeah.
Yeah, I remember we've been talking before that. You told me about this concept of 500 different industries, right?
Yeah.
And these industries, China has almost all of them.
Yes.
And it's the most self-dependent country in the world in that way. And the majority of the regional, cities, even like inside of China, they have almost 450 industries, which is huge. For example, just for our audience to know, I've been also like researching it, and after our conversation, and I looked what is in Russia. Russia is only 200. What is in Saudi Arabia is less than 200. It's like 100. Only 100 industries are in one country, and UAE, where I live in Dubai, is less than 50. So of course, China have a lot of influence for that, and for the looking ahead. How do you think, looking 3 to 5 years ahead, how do you expect Chinese capital to reposition? So more outbound, more selective, more strategic, how it will flow?
Definitely, China capital become more selective and far more disciplined outward. I think it's several areas. First is green energy industry, also and the Chinese capital avoid those sensitive area. Sensitive area like infrastructure and AI data center. But they export the entire supply chain to especially global south country and Belt and Road countries.
Yeah.
So I think the paradigm shift and the actors, so the player shift from used to be a sovereign wealth fund now to industry champions like CATL, BYD, they lead the roles, different from 10 years ago. At that time, those large private conglomerates, they lead the investment. Now changed to industry champions. And the capital flow with these local plants. So these industry champions, they build a local presence. So that's
very, very interesting. So let's say flow will follow the industry champions.
Yes.
Yeah. Then from the middle term for the long cycle, right? So if we extend the horizon to 10 or even 30 years, how do you think Chinese financial influence will be structurally different from today?
And I think the structural difference will be China evolves from just the capital exporter into a set of financial paradigms and institutions. For example, the coming 15th five-year plan, which emphasizes on AI, green tech, and economic security, will allow China-style patient capital to become a credible alternative model. So now China focus on we call it patient capital, different from those capital Western style. They focus on short-term return. I think this will give China more power in future to setting the financial standards even. That's my view.
Interesting. So patient capital, that's the approach from Chinese point of view, from Chinese big asset managers and players. And 30 years perspective, that's exactly the good match, right? So this capital will flow this way. And talking about technology, China is not only exporting capital, but also technology. And you've mentioned a little bit today, maybe we elaborate more about this. From your perspective, which technologies are most likely to define China's next phase of the global expansion?
Okay. I did several studies when I got your task. I need to refer to my notes to save everyone's time.
Of course.
So my belief that the technologies most likely define China's next phase of global expansion are those deeply embedded into current existing supply chains. The first thing is full stack AI, from chips to models to applications in manufacturing, logistics, and energy. This is the first thing I think. The second thing is integrated new energy solutions. For example, photovoltaics, storage, EVs, charging, and more important, grid intelligence. In this field, maybe a lot of investors haven't paid a lot of attention to, but grid intelligence, I think is a very important future technology that China has strength in. The third thing is the hard technologies that China already leads and or quickly closing the gap in technologies such as industrial robotics, humanoid robots, synthetic biology, biomanufacturing, ultra-high voltage transmission, which is China has, I think, the #1 globally.
Right.
Also, next generation semiconductors. And I think these are not isolated gadgets. They are system-level platforms. If you look at China, those things, they do not do it separately. They integrate they have a strategic thinking, integrate into system-level platforms, and also travel together with the capital and engineering capabilities. One thing China is good at is engineering capabilities. I think this is what I noticed.
Yeah, I love your thing that you said about the ecosystems that China built, and all these type of technologies is definitely kind of like creating the ecosystem and supply chain. So that's exactly like very strategic kind of approach, and let's say help with the capital, which also flows from the big players and governments, to support it, right? So yeah, my next question about, okay, so now we know where the money will go. Now we know what kind of technologies will be, supported by this money and will be evolved, but where, right? China, of course, we know, but we obviously see that, China and the whole region is starting exporting technology a lot, exporting capital. And we need to understand where. So which regions or markets do you see are the most receptive to Chinese technology and capital over the next decades?
The most receptive regions, in my view, is the first, of course, Belt and Road countries. They have acute demand in infrastructure. They need industrialization. This China can help a lot. They have a mature solution package, EPC, everything, technology, capital. So this is the first region. The second region is Europe, because Europe has a very ambitious green plan, green energy plan. So they need low-cost, high-efficient Chinese products, because the wars and Europe has a shortage in energy. So this second region. Third region is Middle East, of course. The sovereign wealth funds, they have a lot of dry powder. They also has ambitious plans to industrialize for national security. They need help because China also has very mature solutions, almost everything, in my view.
Right.
And other regions such as Southeast Asia, part of Africa, I think these still will see a lot of cooperation.
Of course. Very good, very good. So, yeah, and actually not so much time left, and only 20 minutes we have for today. Of course, I would love to sit here longer, but my last question for the day, as capital becomes more powerful globally, what responsibility do large allocators, like you are, and let's say your partners and friends, have in shaping which projects to scale and which do not?
I think for allocators, for a fund like us, we actually focus on focus on new technology, also list companies with high tech. So as an allocator, I think we need to distinguish between true value creators from the short-term financial engineering. Because a lot of companies, they do financial engineering, get paper profits. I don't want to name the name. There's several AI companies. They do a lot of financial engineering. So as an allocator, we need to avoid those traps, focus on the long-term value creation. Right. Especially in manufacturing, logistics, biology, agriculture. We focus on the reward asset, right, which is translate to other way. That's your expertise. Yeah. So the reward asset, that's I think.
Very good, very good. Tangible things, which yes, can grow with the time being. Yeah. Thank you so much for coming today. It was really pleasant conversation, a lot of good knowledge. I hope you guys enjoy. Give a very good applause to our guest today. So thank you so much, Will.
Thank you very much.
Yeah.